Yo, yo.
Yep. Back live. Oh shit, we gotta send them out though. Send them out. Send them out. Ain't no word, always up to no good. Right, successfully sent. Back again. What up, Gabe? Thanks for tuning in. Early bird special. This is episode number 8 for us. We 2 months in this thing.
Yep. Yeah, how y'all doing? How y'all doing? Appreciate y'all tapping in with us.
What up,
Welcome to
Danny?
Square Knowledge. Welcome to Square Knowledge.
Yes, sir. Get your finance game up. Get your investment game up. Man, that shit is not trying to cooperate. All right, that's a little better. Yeah, man, Gabe, I'm gonna have to tap in with you, man. I know you be on your investment shit. I see you doing your thing, bro. I might have to tap in, bro. Pick your brain. The Boundra, always official. He got some things he can bring to the table for us too. We're gonna have to have a guest appearance with him. You know, he got a lot of financial knowledge. Working in the bank for all them years. Wait about 2 more minutes for a couple more people to join in, then we're going to get to it. Another Market Monday review brought to you by yours truly, the D-Time Experience, and me, Trey 3 Tyler. Oh, we're at 34. Yeah, I feel like we should do like a 5-minute and then just go ahead and dive in.
Yep. And who's y'all want to win the Super Bowl, man? Put that in the comments, man. Let me know. I'm not gonna lie, I had the Bengals all the way. They didn't hold it down for your boy though.
No,
it was a good game though. I appreciate the game. It was definitely a good game.
They covered if you bet on them.
Yeah, for real. That is true. That is true.
Yeah.
Cooper Kupp got the MVP, you know what I'm saying, from Eastern Washington. Or went to Eastern Washington. I don't think he's from here, right? I don't
know where he's from. But he definitely went to Ewo. What up, Allie?
Allie.
Our second Cash App winner.
I appreciate the boundary. Way to stick true to the team you actually picked. You know, he could have lied and be like, yeah, I picked the Rams. Because I definitely picked the Bengals. I did not want the Rams, who's in our division, to win. You know, only we're allowed to win.
Yeah. All right, man. Let's get to it.
Let's get to it.
What's up, baby love? Thanks for joining in. Yep, here we are, man. Another Market Monday review, episode 8. 2 months strong. Hopefully we're getting better. Our content's getting a little more engaging for y'all. This is Market Monday review brought to you by Square Knowledge. Our content, we're reviewing the good fellas over at EYL, Earn Your Leisure University. Their Market Monday episodes that they do every Monday night. What's up, Suge? So yeah, we're gonna give you guys this highlight reel, run through what the guys were talking about. Troy Millions, Ian Dunlap, and Rashad Bilal. They always come with a lot of good financial knowledge, business knowledge, knowledge in general, So yeah, we're going to get to that. Before we get to that, I just want to let you guys know we are not financial advisors or CPAs. Our content is for entertainment purposes only. Trading and investing has considerable risk. Please do your own research. Please do your own analysis for your own circumstances, and please consult with a financial advisor.
Come on.
So yeah, let's go in, man. They opened up the episode with Microsoft has some big plans, I guess.
They trying to be the giant. They trying to be the giant in the sea. They trying to take over.
Yeah, they plan on, and it's not really just Google. They're planning on trying to take out all tech. Will they actually take them out? I feel like the word "kill" that they use, that Microsoft plans on killing all tech with one move. Kill. I think it's a little dramatic. Of course, they're gonna have. Yeah, they're gonna have the drama in the headlines. They're gonna have that clickbait, but yeah, let's talk about their plans. What Microsoft plans to do to
what they've already done.
Yeah, exactly what they're doing to corner the market. They want to decentralize the App Store and make it a creator economy, right? Make it more friendly and more beneficial to the creators, right? One way they plan on doing to do that, they're going to give creators a higher percentage of the purchases, that happen in the App Store, right?
Yeah, ownership.
Yeah, they're going to give them higher ownership. Right now, Apple and Google, they give you, what was it, 30%?
Yeah, they charge 30%. Yeah.
Yeah, they charge 30%. So if you're an app creator, a content creator, what's up, Slim with the tilted brim? You get charged by Apple, Google, 30% for them to have your app in the App Store, and Microsoft is in the works of cutting that in half by more than 50%. Their plan is to charge only 12%, right?
Mm-hmm.
So what is it? And also, what this will do is it'll make it a creator economy, right? It'll make it beneficial for the people who are making it. Right now, if you put out an app, if you're not in a contract with Google or Apple, your app won't be advertised in their stores, right? Mm-hmm. So them creating this creator economy will do away with that. You won't have to have those contracts in place.
And then to add to that is, say you have a great idea, you have a great app, and obviously it's not getting the attention that it needs at the beginning stages. Google and Apple or they might see that and make their own version of it and push it out even further. So what Microsoft's trying to do is they're trying to create, give you that ownership and then allow you a platform to where you can give it to everyone. Because who they just partnered with, the big merger,
Activision.
So yeah, so this is all based off of Activision. Obviously, they're a gaming company who created Halo. And so they're kind of basically trying to change the tech game. You know what I'm saying? To where it's going to be a new era of tech. Allowing the creators and the content be owned and widespread for everyone.
Yeah. So that's basically Microsoft's big plan right now. They're trying to decentralize the App Store, create something that it's gonna undercut their competition. Will it kill Apple, Google? My guess would it's not gonna kill them, but are they gonna have to adjust? They're gonna have to call an audible at the line of scrimmage.
For sure.
Yeah, I think so. They probably will. So yeah, they also mentioned how this can affect artists too in the music industry. $1 billion in shares in Activision. Damn, yeah, I didn't know that. Warren Buffett's company bought $1 billion worth of shares in Activision before the merger. That insider trading.
Yeah, I was gonna say that. Yeah, it's insider. That's the first thing I thought of.
For real. Well, that boy moved the market. Yeah. Thanks for that, Jim. No, Jeremy. But yeah, also another thing they talked about was how it can benefit artists. I wasn't quite sure. I didn't fully grasp it, but
I think it's the NFT way, basically well, I'm not sure. It was really just like how games we play, Madden and 2K, how their music's in the game. Now they get more ownership in that instead of it just the way I was in, or how Nas did the NFT for one of his songs, and you can get ownership in that too. And that he has more rights to his songs to where he gets that. That's the two ways in the tech way I'm envisioning it.
Yeah. Well, I think it plays into the app store as well, because if an artist, like you said, if his soundtrack is on Madden, he gets a one time check, right, for it being on Madden. But if they somehow incorporated their music into these games, into the apps, now they're going to get paid every time it gets played on the app or the game.
Right.
You feel me? So yeah, that's
obviously that's in the works. That's just something that they're Microsoft is trying to get obviously bring to the table. Yeah. With the merger with the Activision and all sorts of new ideas they got coming. So be on the lookout for Microsoft, man. Obviously, if you listen to the three amigos, the three kings of EYL, they talk about Microsoft every day, every time. Microsoft. So keep an eye on them. They're definitely the big dog of the tech world right now. They're trying to become the king of it. So just be on the lookout for Microsoft.
Yep, they're at $300 right now, and it closed yesterday right under their 200-day moving average, but closed today above it. And I remember Troy was talking about before, if you look back on their timeline, they're not under their 200-day moving average for very long. So this is potentially a good buying point. Yesterday I saw that, I was like, ooh, because I have an on deck section of a few companies that are on deck for me to purchase, and I saw them close below that 200. I was like, ooh, I kind of got a little itchy, but I was like, I'm gonna wait. And today it closed above it, so it's definitely looking like they're getting to it's at a good buy point, and these are long-term holds, and it is still on a downtrend though, so that's why I feel comfortable still waiting. I feel like it could pop back below that 200-day moving average, so yeah, we'll see. All right, moving on to we were just talking about the Super Bowl, but what's up, Akila? One of the commercials that had everybody still talking 2-3 days after the Super Bowl was Coinbase. I don't know about y'all, but when that QR code popped up on the screen, these times I was at my house, I pulled the phone out quick. I'm like, hold on, what's this?
Right.
And I loved it because it didn't say Coinbase or anything. It was just a QR code.
Yeah.
So it really just had people thinking like, what's this? I pulled it up, boom, get a chance to win $1 million in Bitcoin, and sign up, and all that stuff. Just a great marketing technique that they used.
Great marketing tool.
You want to talk about how Ian was? He says it's Go ahead. You know what I'm talking about.
Yeah. So with obviously people if you did scan the QR code, like my guy Gucci did, supposedly Coinbase crashed, right? You got stuck in it, or it wouldn't let you fully log in, or whatever the case may be is. And obviously in the Monday Market Update, Ian Dunlap talked about how possibly, allegedly, obviously he doesn't know for verbatim or if it's a fact, but a marketing move could have been that they allowed their servers to crash to a certain degree, right?
It was strategic.
To have that to strategic marketing, to have that apologize message after, right? To where people join. Obviously it could have been where influx of too many people were in there, but Troy and Rashad were thinking on the other side of it, like, why would they not be prepared to have it ready to go with all this the flood of everyone joining? But then Ian was like, what? You're right, and I think they foresaw that, but they wanted the talk. They wanted us to talk about it. They wanted the controversy of it, with quotes. I'm adding the quotes on it, to where now we're all talking about it. Now it's something that you have the potential of winning something, money,
It's more
Now,
marketing, more free
yeah, so it's all
marketing.
market. So now instead of you going, man, I need to get this QR code back, it's, oh, let me log in. And now they got other people going to the website now. They got other people going to this now. Now we're
Yeah,
talking about it. You're talking about it after the commercial. So it was just it could have been a marketing thing. Could have been they weren't ready for the influx. Who knows, right? But the fact is they got everyone hooked.
yeah,
So it was just great marketing move.
yeah, yeah. It was definitely a good strategy because I was sitting there trying to, and that's the thing too. Why Ian says he thinks it was a strategy because nobody was locked out of their app. I wasn't locked out of my app. I still could have went and bought crypto, sold crypto, did whatever. It was just that link. That link was not working. It was crashing. It was try again.
Mm-hmm.
Don't. And it also had a message that said, "Don't worry, your spot in line will be saved." And then I checked my app and it was like, "You're in there." So I'm
Yeah.
like, "Oh, okay." So,
And he tried though, like he stuck, he stayed consistent because I
yeah,
was with him, man, and he kept on going through it back and forth, and finally it just all of a sudden it put him right in. So it definitely could have been a marketing strategy, definitely could have been something of that nature, man. But it was just definitely a great marketing move for sure.
yeah, yeah. Zane Brown in the building. What's up, young fella?
Zang.
I think my boy Tyron got in here too. What's up? We had 10 people. What up, y'all? We appreciate you guys. We don't touch double digits often in these first 8 episodes. Feels good when we do. So yeah, what up? All right, we're gonna keep it pushing. We got a couple more segments, about 2, 3 more quick segments we're gonna run over. The next one is it's we're gonna basically touch on politics and how these politics affect the market. Everyone it's all over. If you have social media, we're hearing a lot about Russia potentially invading Ukraine, right? And what that means for us here in America as far as the market, what that can do to our market. Is it a threat to us? Could it be damaging if Russia takes over? And the answer is yes. It could be damaging. It could affect our market. Ian says if that happens and they team up with China, which China, D-Time will touch on, is China's moving in on Africa and trying to get their stronghold on there in there. But yeah, Ian was saying if it happens, it will affect the market. And he could see it potentially going to the downside 5-7%, which isn't major. It's not like it's going to force a bear market or anything. But yeah, it could affect our market. That's why it's important to stay up on the things that are happening in politics with overseas, things that are happening overseas, that they do affect us here.
Yeah.
So yeah, just be on the lookout for that. The plan from what I'm hearing is that Russia and China, like I said, are trying to team up, and make a political superpower. What's that right there? What crypto? What's up, Sam? What's up, Tiana? Sam, asking what crypto to buy. We'll touch on that. I got like 1 or 2. We can touch on that at the end of the show. We can answer a couple questions for anyone that has any questions. But yeah, so that's something to be on alert about. Check the news daily, see what's going on with that stuff. Yeah, China and Russia, they team up to make a political superpower. They're trying to push. They're trying to push America down. They want to be the world leader when it comes to just everything. Not just finances, but
The economy.
commerce. Yeah, would you say?
The economy, really, just
The world economy,
yeah.
exactly. They want to be the ones who are saying what's going, when it's going, and how it's going.
Mm-hmm.
So yeah, that's something to be on the lookout about. D, I don't know if you got anything else you want to add to that.
Not really. It's just politics is just such a crazy topic and a broad topic to where it can go different. You can look at it different ways, different point of views. It's just we're just looking at the point of view of investment, right? Obviously politics affects the market, and we're just so we're just China, trying to invade Africa or stronghold Africa, and then Russia trying to invade Ukraine, and then hit the hit whatever else, and then those two major countries are trying to either merge together on and then come against us is a big deal. So we just got to keep a look out on that, or just keep an eye on and watch the news, watch whatever you're watching, and kind of see what that does to the market.
Yeah, and how it affects us too is they start with the port cities, right?
Port cities, that's right.
Yeah. I just glanced at my notes and saw it. They take over these port cities, so now they can set the price for if we want to import, export anything. If they take over these port cities, they set the price, and we have to. I mean, what else can you do? If you walk into Foot Locker and they say these J's are $250, you either paying $250 or you walking back out. And finding another way, Yeah. So
they already up there, by the way. They like have 300, 400.
Yeah. So that's why the port cities are big. So they want to start with those port cities, take those over, and move inward, and create that political superpower. So
they're trying to surround us.
Yeah. Yep. So yeah, man, that's a quick little overview of the whole Russia-Ukraine thing that's going on, and just stay grounded. There's everything in the news is to panic you and to get your emotions all in a bunch and
uproar.
Yeah, have you up in an uproar. So just stay grounded. Tap into EYL Market Mondays and Tuesdays Market Monday Review, and we got you guys. What up, Jordan? King JTZ, I see you, man. All right, yeah. So let's move on to what they surprised me with, what I had no clue about, was the watch market right now. We're talking watches, Rollies.
You know what time it is. I don't got mine on right now, but
Yep, watches, Daytona, Sky Dwellers,
APs, Rolex.
Yep. So, according to the fellas, the watch market is crazy right now. I guess if you can buy watches right now if you're able to get them, and right away, you can sell them for 3 times as much as what you bought them for.
Yeah, retail price. Yeah.
Yeah, you can sell them like 3 times as much as retail price. And they also said, these are factories straight from the stores. You have to be careful buying things secondhand from like jewelers and stuff like that. Yeah. So and obviously whenever you can buy something right away and it's automatically double, triple the price, it's because of no inventory. You know that the supply and demand is messed up. There's no
supply
inventory.
and demand.
Yeah. So yeah, basically they're bringing this up because watches are an investment.
Yeah.
Like you said, making sure you're buying them from a factory, from the store. These watches are investments. Certain watches, that's why I named them off too. Those are the ones they named off for Daytona, Sky Dweller, AP, Richard Mille. These are real gold. So these are investments that you can hold on to and potentially
hold on for long term, not short term, long term. Yeah. And then one thing Rashad also said was always have insurance on them as well. Make sure you have insurance on them.
Yeah, for real. If you're spending 20, 30, 40, 50 bands on them, yeah. You definitely want to have some insurance.
That's dope.
What up, Saba? Thanks for joining. So, what's also interesting about them is because the supply and demand is so messed up right now. I guess even if you have, like, having the money isn't enough. Even if you have the money, it's. I mean, I haven't tried, but if you walk into these stores, it's going to be hard to get these purchases. You don't, especially if you don't have a relationship with the store and a customer profile. It's hard to get them. Having the money just isn't enough right now. So that's why they're hot as well. You can't just walk in and buy them. So I don't know if any of you guys out there sitting on some Richards or some Sky Dwellers. I can't even say that word. That's a tongue twister. Look into it. You could potentially be up more than you realize. And also too with from what I've learned, I don't know a whole bunch about jewelry, but why these original pieces are worth something is, like, you see a lot of artists and rappers that have iced out chains and watches. But from my knowledge, when you dig into the frame of your watch or your piece, the gold, it devalues your piece. So that's why I like these ones that are flooded with diamonds sometimes may not be worth the ones that are plain Janes, you know.
Plain Janes.
Of course, there's going to be some ones that are iced out with hella diamonds that are going to be worth more, but just know, you know, do your own research. But from my knowledge, when you dig into the frame of your watch or your piece, that devalues your piece, especially if it's a one of a kind piece. If it's a piece with your name on it, it's not really going to hold its value, because I mean, unless you sell it to somebody else who has your name, then maybe. But most of the time, that's something you thought of yourself that you're going to like. It's going to be hard to kind of flip that, you know. Yeah,
Jarv was good, Jarv.
Yeah, what up, Jarv? So, yeah, also handbags, too. That touched on handbags.
Yep.
Handbags are crazy right now as well. You know, the Birkins or whatever, you know, that's not.
Did they say something that StockX is about to expand into selling handbags? I think that, I don't know. I could be wrong. Don't quote me on that.
Yeah, they might have. If so, I missed it. But yeah. So the watch market, man, it's something that you can definitely do some research in and maybe invest in. You know, insurance though, like D-Time said, definitely look into this insurance if you're gonna be purchasing something like that. I mean, we all got insurance for our cars that are not even worth 10, 20,000. You better get that insurance for that
AP.
Yeah, for real. So yeah, where we at? Okay, yeah, we're running pretty good on time. So yeah, that was basically the market stuff. Like we said, Microsoft's big move, the political move, how that can affect the market with Russia and Ukraine, and now, you know, the watch market. That was basically like the market updates they gave us for this week. But then they ended with a great segment. You know, I would advise everybody to go in and watch this. Watch the full episode. Watch the segment, especially the last segment they did with a guy named Frank Holland. He works for CNBC. He's the one who put out the report that I'm sure some of you guys saw last week. I think it was last week, about black spending power being up and black net worth being down. So they chopped it up for a good, I think, the last probably 40 minutes of the episode. Mm-hmm. And you know, they had some good tips in there, some good information that we're going to run down a few of them. So yeah, it was Frank Holland, CNBC. He was a guest appearance on the show, and yeah, we're going to run down some of the stuff that we took from it. You want to start it, D?
Yeah, the one thing which I definitely didn't know is Frank talked about just on the investment side was I bonds. You know, obviously bonds are very, very slow increase in money or in investment, but it's I bonds are inflation bonds that are almost impossible to lose money. So it's another safe bet or a safe way to invest. That's something, you know, I'm going to look into just because I'm curious of just how it works. I might, you know, obviously I'm going to stick to my core four, but I bonds are something, if you know, you're like, hey, I don't got money like that to where I can lose it, because obviously it is a risk when you are investing. But so I bonds is inflation bonds that, you know, that basically do not lose money. So that was one snippet that, you know, you learn something new every day. So that's something I definitely learned, didn't know about that one. So
yeah, keeps pace with inflation. So
yep,
like we talked about in one of the first episodes, you know, if you have $100 and stored away under your mattress, you know, a year later, it's still going to be a $100 bill, but that $100 bill is going to have less of buying power. Yep. So technically, you're losing money just by it sitting. That's why investing is so important. You know, you want to have your money working for you and having it keep up with inflation. At the minimum, you want to keep up with inflation, or you're losing money. Even if you have that same amount of money in your account that you had last year, you've actually lost money because your spending power has decreased because of inflation. So yeah, just to touch back to on the statistics of the report, it was black spending power hit a record of 1.6 trillion in 2021, but black net worth was down 14% at around 24,000 per family. So, you know, that's alarming, you know, to us in the Black community. It's a cause for pause, and we're going to touch on some of the things of why, you know, why that is. But one thing is, I mean, that's kind of obvious. It's just spending on things that don't gain value, you know, where the Black culture, where, you know, we're big on entertainment, and, you know, we set the trends. We are the trendsetters that a lot of other people make money off of, as far as the look, the style, the brand, all that. You know, we set these trends, and it kind of it kind of comes to bite us sometimes, for those of us, including myself, who aren't financially free, you know, because we spend our money on things that don't gain value: shoes, cars, clothes, bar tabs, dinner tabs, you know, restaurant tabs, all that stuff. They're fun times, and it looks good, and we're comfortable. But at the end of the day, over the years, it's not doing anything but losing, and it's not giving us anything in return. We're not putting our money in places that give us something in return, you know. So yeah, that's you know, one of the main reasons. Ian asked Frank if he ever thought the wealth gap can be closed. I remember Ian touching back before on him saying that we're like a few years away from not being able to close the wealth gap. And he asked Frank that question. Frank said, yeah, you know, it is possible. So that was promising, you know, to hear that. So yeah, Frank thinks the wealth gap can be closed. And also, before I move on, I want to touch on the whole spending part, because another guy came in at the end of the episode, right?
Arthur.
Yeah.
King Arthur. They call him King Arthur.
Yeah, they're calling him King Arthur, and he wanted to give more context into the whole, you know, idea of us in the Black community, us in the Black culture, not spending on things that don't gain in value. And yes, that is true, but at the same time, it goes a lot deeper, because a lot of the things from his statistics, what he was saying is that the percentage of our money isn't necessarily just going to things that don't gain in value, but it's going also. What was that?
Entertainment it doesn't just go to entertainment. Is that the only 3% to entertainment?
Yeah. It doesn't just go to entertainment, but it goes to necessities. As far as, basically, we've heard the phrase living check to check. So, you know, we'll get our check, and we have to pay our car notes. We have to pay our rent, our house notes. We have to pay. Food. Yeah, we have to buy food. We have to, you know, get school supplies for our kids and stuff like that. And so it's not that we just are irresponsible. So irresponsible, so ignorant about it. But it's just the fact that the positions that we're in, we don't have much wiggle room to, you know, invest in these other things. And a lot of it is systemic as well. We've been put in these corners of the environment on purpose. You know, it's not by chance, you know. So where it starts with backing ourselves out of these corners is the education, is learning about these things, learning about these investments, and learning about our you know, financial literacy, getting game to these things, because this is once you have the knowledge, you can now back yourself out of that corner. You can start putting that 3% that we have into you know, investments, and into smart, you know, smarter things that are going to get your money back, or going to at least give you money, you know. So not having the education, it locks you out of these opportunities, you know. So yeah, you know, getting that education, also becoming working on your skills, being a skilled worker, that type of stuff is going to allow us in the Black community to have jobs that now pay us more, you know. So you know, that's big, the knowledge, financial literacy, and working on your skills, becoming a skilled worker, because that is going to increase the amount of money we make. So now we're not going check to check.
Yeah. Another thing that just on the just to add to that, Frank also basically said the way we, you know, increase, you know, basically decrease the wealth gap is really just coming together as a culture. Working with Black companies, working with Black businesses, buying from Black businesses, And then also talking business, kind of like what, that's kind of why, me and my, my brother right here, Trey, we decided to even get on this thing. Obviously, we know we're not obviously professionals, but we wanted to talk about it. We want to make sure we're talking about business, we're talking about investments, to where we can learn from you guys and you guys can learn from us. Because like I know obviously not everyone has time to jump on, EYL every night or every Monday or whatever the case may be. So it's just basically talking about it, being able to work with Black businesses. I think because that's what just to piggyback off what he said with King Arthur, talking about how we, saying majority of our money does go to our responsibilities, our necessities, housing, rent, grocery stores, food. But then if you look on the macro side of that,
Hold
who
on.
owns grocery stores? It's not a Black owned business, right? Who owns the housing market, or the food, right? So it's just, or the banks, right? So we don't own the necessities. So one of the things that King Arthur was saying, which kind of, you can go back and forth. It was, like I said, it was a great conversation. So definitely tap into it. But just like how, like, the Black, the Black wealth, or the Black higher class, they own the entertainment business, right? They own football teams, they own basketball teams, and obviously we're going to support, and we jump to the entertainment side to support them. But
yeah, well, they don't own it, but they're making the most money off of it.
Yeah, exactly.
The owners are still it's white men who own all the teams,
right?
You feel me?
So it's all about what we can own and what we can come together with, right? So it's something we just gotta break the cycle. We gotta break the mindset that we've been put in for years, to come. And we gotta break the cycle. We gotta be able to talk about business, be able to talk about your career. One of the things that Frank was saying that he's like was saying that he was scared of even mentioning his salary. Being with CV. Who's he with?
CNBC.
CNBC, he was, afraid to tell someone about his salary, but then he realized, if I tell people my salary, or tell, my fellow brother about my salary, they'll know when they go into the interview what to come in at, what to say,
what the demand
is, right? To where it's not, competing with him, it's just helping him get to the same level, instead of them lowballing that person, and you like, no, that ain't me. You know what I'm saying? So it's just, stuff like that, man, to where like we gotta stick together, we gotta be together, and we gotta help each other. You know what I'm saying? So that was one thing. That's just kind of a broad stroke of what they were talking about, but they went in though, for sure. So definitely tap in.
Yeah, they did.
It was different perspectives of both different sides of how we should approach everything. Because Ian, if you guys seen it, Ian be going in. So he don't want no crying, no sap talk. He just like, look, be about it and do it, and do it. So
yeah. So yeah, man. Yeah, they went on for a minute, man. But those were basically the some of the highlights from that segment. Another thing I left out was Black people have 300 billion less in wealth than white families, and a lot of that comes from inheritance,
Mm-hmm.
And like I also said, I touched on a lot of it is systemic, A lot of people have heard about redlining, how Black people weren't allowed to buy houses, and in certain neighborhoods and stuff like that. And what that did was allow the low class white people in that time to now buy in those places and become middle class. But it's systemic, but that doesn't mean that we can't get out of it. That's why sharpening your skills and just getting the education, it will back us out of it, and we will close the gap. We are the most. We are the strongest.
Mm-hmm.
We are the most resourceful. You feel me? We can.
What up, big bro? Man on a mission, 99.
Man. So yeah, we can back ourselves out of it. And it starts with the education. I think a lot of people would have loved to get on with Bitcoin back when it was $100, $200, even cheaper, right? But were we educated to know about it? I wasn't, and I would have loved to have been. And now I'm like, man, I want to educate myself so much more now for when these next opportunities come, because the opportunities are always going to be there. Like I mentioned in the I think last episode or the episode before, when you're looking for a price to buy in at, and you may miss it, and now you have that fear of missing out, and you could, if you miss that, you could buy at a bad price now. But it's like take a step back, relax, breathe, and realize another opportunity will always come. So yeah, man, just educate, man. Read, educate, sharpen your skills, become irreplaceable. Is what Ian talks about a lot. Be the best at what you do. You know, take it a day at a time.
Yep.
It can seem it can seem stressful that you have to go so far, and you know you're starting behind the eight ball, but just take it a day at a time. Do what you can do, and yeah, we shall overcome.
Yeah, so the biggest takeaway from this last night, this week's episode was tech, and skill work. Like he just said, tech is ain't going nowhere. Tech is is the new hot section, new hot
Sector.
media, or whatever you want to call it. Tech is a crucial thing. You know, everything has tech in it. Everything is tech now. I think I mean, this is kind of a sidebar, but even Elon Musk, I think on his Instagram or somewhere, said we're already all cyberboards now, that we're glued to our phones, we're glued to our so the tech ain't going nowhere. Another thing that just a couple of gems I'm gonna leave y'all with. Believe in yourself. One thing Frank said was, some of his big takeaways to where he got where he was don't tell yourself no. Let other people do it. You know what I'm saying? So if you believe in something or you want to try something, do it. Don't tell yourself no. Don't tell yourself you can't. Dream big and even bigger. Obviously, all of us have heard that one before. But just hear you, to say it again. Another one is buy property. Obviously, the market does change. It goes up and down, but it's an asset to where it's versatile. The one thing, obviously, if the market is down, you can live in it. Obviously, there's equity into property. You can rent it out. You can flip it.
That equity.
There's so many ways. So many different things you can do with the property. So it's always buy property, right? So it's very versatile to where you can make a play on it, right? In any avenue. So that was one thing, and then that's basically the kind of the three I have for you guys. But yeah, y'all tap in with us, man. Y'all do what y'all do, man. Let us know if y'all got any stocks or any gems, that you guys want to lead our way, man. We're happy to receive them, happy to accept them, and we want to learn just like y'all. So let us know.
Yeah. Real quick, any questions? Put them in real quick. Samson, I'm not sure if he's still in there, but he asked about any cryptos to look at right now. I got 4 cryptos on my watch list: Bitcoin, Ethereum, Solana, and Polkadot. Their Polkadot's ticker is DOT. Solana, I got put on with Polkadot through a guy named 19 Keys, which he actually just signed with EYL.
Yeah, I saw that.
Yeah. Look up 19 Keys. Watch his videos, man. He's dope. He's got a lot of information. He's real spiritual. He's deep. And but yeah, I heard about Polkadot through 19 Keys. Solana. Why I have Solana on my watch list is Solana. The potential capabilities that Solana has is to work like Ethereum does in the what's that shit called? The metaverse, as far as purchasing things. Huh?
Is it a blockchain or something like that? Or
well, yeah, the blockchain is what everything gets recorded on, but Ethereum is what people are using to buy things on the metaverse. That's like the metaverse money. And Solana and Solana has the same potentials. Solana was actually I think it was one of Rashad's picks for the year, and that is down. Solana right now, its high was 260. It's at 103 right now. So, and it just made It's finding support right now at 103. It hit 103 back in January, and now it's hitting 103 again February, and it seems like it's finding support right there. So it could be a good buy-in. Please do your research, know what you're investing in and why you're investing in it. And Samson asked about cryptos earlier, so I just wanted to touch on that real quick before we got on out of here. We did good on time yet again.
Let us know if you guys got any questions. DM us or hit the comments. You know what I'm saying? We'll definitely look into it, or we might have an answer for you, might not, and we'll all learn together. You know what I'm saying? So definitely hit us up with the questions about any investment questions you got. Let us know.
Yeah, for sure. Gabe, appreciate you tapping in, bro. Appreciate the comment. I'm gonna hit you up, bro. I want to chop it up a little bit. So yeah, thank you all for tuning in.
To Square Knowledge.
Yep, another episode of the Market Monday Review brought to you by Square Knowledge. You know what it is.
You know what it is.
All right, man. We out.
We out. Appreciate y'all. All right, bro.
All right.